Good morning, folks. My name is Chris Chandler. I'm the president of PFL. This is our fourth podcast. We plan on going live next week at 9 a.m. Eastern, just before the markets open. We're going to try that for the next couple of weeks, and then we're going to start having guests on the show and see how that goes. This is work in progress, folks, so please stick with us. My IT guys are very, very excited. They do tell me we need more followers, so please follow us and pass on the good word. Our weekly quote this week from people that we believe are really, really smart comes from Indira Gandhi, the former Prime Minister of India. Indira was an Indian politician and a central figure of the Indian National Congress. She was the first, and to date, the only female Prime Minister of India. Indira was the daughter of India's first Prime Minister. He's a tongue twister, folks, so I'm not going to embarrass myself by trying to pronounce his name. Her quote is, "There are two kinds of people, those who do the work and those who take the credit. Try to be in the first group. There is less competition out there for that type of role." The U.S. Labor Department stated on Thursday of last week that U.S. workers filed an additional 1.45 million jobless claims, bringing the total jobless claims since the pandemic to 52 million people. We're almost approaching the population of the entire country of Germany. Rail traffic deteriorated along North American routes in week 30 and was down 9.7% year over year. 10 of AAR's 11 major traffic categories posted year over year declines, with the largest decreases coming from coal, metallic ores and metals, intermodal and non-metallic minerals. The largest increases came from farm and food products. In other transportation news related to the long-term viability for crude, and one you may not think of looking at, but we've had our eyes on it here at PFL, is ship orders have collapsed. Is a rate boom to follow as far as tankers and other shipping methods around the world? Well, the pre-COVID bull case for shipping rates was about plunging new build orders. A drop in orders of 2019 pointed to rising rates in 2021. Given the lag between signing a contract and delivery, bottom line is there's going to be a lot fewer vessels on the water in 2021 and 2022 beyond what was previously thought. According to Vessels Value Limited, the tanker order book has fallen to 9% of the operating fleet in terms of capacity, which is measured by deadweight tons. This could be a long-term tailwind for crude by rail if the economy pops back and if we see less tankers on the ocean. This combination could contribute to wider spreads, making it attractive to transport crude by rail for some refineries instead of taking in port vessels. Overall, the markets were mixed last week. The Dow closed higher on Friday, up 144 points, or 0.44%, to finish out the week at 26,428 points. In overnight trading, Dow futures traded lower, and we are expected to open this morning down a mere 15 points. Oil traded up 35 cents to close at $40.27 on Friday on the New York Mercantile Exchange. That was down $1.02 per barrel week over week. Oil is lower in overnight trading and is poised to open at $39.80 per barrel, down 47 cents per barrel from Friday's close. May was the largest output cut on record as it relates to crude production here in the United States, falling a record 2 million barrels per day. Friday of last week was bad for big oil, with terrible earnings reported by all throughout the week. With the cuts we are now starting to see, the impact of the barrel suggests that we are going to see a tighter market in the future, and if the economy turns around, we'll have trouble meeting demand in the short term. The US dollar continued its dramatic fall on Friday of last week and had its biggest monthly drop in over a decade. Thursday's terrible GDP news, global stimulus package, and a weak US dollar should be supportive for crude oil prices, if nothing else. Real gross domestic product decreased at an annual rate of 32.9% in the second quarter of 2020. According to the advance estimate released by the Bureau of Economic Analysis, in the first quarter, real GDP decreased 5%. Current dollar GDP decreased 34.3%, or $2.15 trillion. In the second quarter, a level of 19.41 trillion. In the first quarter, GDP decreased 3.4%, or 186.3 billion. PFL's rail report just sent out for a more detailed analysis as it relates to the country's GDP. Crude by rail comeback? Who knows? PFL is keeping an eye on DAPL. No news yet from the judge if DAPL will shut down or have to be appealed again. In interesting news, One Oak said on its earnings call last week on July 29th that it could repurpose its Bakken natural gas liquids pipeline for crude oil service if the Dakota Access pipeline shuts down. We have no idea how long this would take, this 10 seconds, but we're on it. We're going to have our analysts look into it and report back to you. We're also watching Marathon. No news either on Marathon's High Plains crude oil pipeline that was ordered shut down by the U.S. Interior Department's Bureau of Indian Affairs. On an interesting side note, Marathon is selling Speedway gas stations in the United States to 7-Eleven, owned by the Japanese investors, a deal worth $21 billion that was announced overnight by the folks over in Japan. Canadian producers said they are increasing production. However, crude and basis markets suffered in Canada last week, and netbacks got worse for the Canadian producers than its U.S. counterparts. WCS calendar month average for September delivery closed Friday at minus 993 US per barrel, below WTI. The implied value on Friday was 30.58 US per barrel, compared to an implied value of 31.88 US per barrel on the 24th of July, therefore down $1.30 US per barrel week over week. See PFL's rail report. I think you'll find it interesting. We go into more details about the topics briefly discussed today. In the week to come, Monday, vehicle sales numbers come out, manufacturing PMI comes out, ISM manufacturing comes out, and construction spending comes out. On Tuesday, we're looking at factory orders, and on Wednesday, ADP employment, international trade numbers, services PMI, and ISM non-manufacturing numbers will come out on Wednesday. On Thursday, of course, we have initial jobless claims. Hopefully we see a decrease in that, folks. Employment, wholesale trade, and consumer credit. That's all, folks. We hope you have a great, safe week, and we'll see you next Monday. PFL has been extremely active in storage and all rail-related activities. Make sure to check out our just posted reports at www.pflpetroleum.com or call PFL to troubleshoot any questions or concerns that you may have. Our number is 239-390-2885. Thank you.